Well, Redfin's talking about 2026 having a housing reset, and a lot of it has to do with the Federal Reserve, which, why all of a sudden is there this big delay in getting a new Federal Reserve person chosen? Donald Trump told us we were going to get the pick this week, but now he's delaying it until next year. Why is he doing that? Well, we might have some insights into exactly why. Plus, we got to break down what Redfin is saying here on top of what the heck happened with Microsoft this morning, because we know AI is what's holding and propping up this economy. And frankly, unless you're a stock millionaire right now, the economy doesn't feel that great. It makes sense. Mostly because 27-week unemployment is rocketing up, black unemployment, a historical recession leading indicator of the most vulnerable getting whacked, is skyrocketing. Pay growth is falling. We just had a terrible ADP report this morning that missed and indicated we're now net negative on job gains since July, which also isn't great. This is the worst ADP trend we've had since 2023, so still not terrible, but I mean, all you have to do if you want terrible trends is look at Challenger reports. Challenger reports tell us not only did we have the worst layoffs in 22 years for an October month in October, which also happens to be the month we're not getting data for thanks to the Schumer shutdown or Schumer siesta, whatever you want to call it. But October, per the Challenger job cuts report, is not only the worst October in 22 years, but also the month that we saw plans to lay off more workers skyrocket by 28.5%. It's a 28.5% increase in layoff plans since March. That's not great. So it's understandable the jobs market and the economy don't feel super great right now. And you've got stats that for Black Friday, stores that had the best results were stores that had sales for under $100, as people are, pinching together the pennies. That said, let's talk about this Redfin housing reset to see will there be any kind of relief for housing for folks, and then also what The Economist is talking about regarding the Federal Reserve, because the economy, I think, over the next 5 months is going to be in sort of critical reset territory. And there's probably a good 5-month set of time to be cautious, save money, reduce debt, get some cash reserves if you can, add some skills, recession-proof skills, whether it's like nursing or the trades maybe, or even recession recovery skills like real estate and lending. But you'll see exactly that actually in this Redfin piece, so it'll be very interesting. But let's hit on this. So what's going on? So the first thing that's going on at the Federal Reserve is this concern over who do we pick. So Trump's like, let's pick Kevin Hassett. Okay. The problem with Kevin Hassett, we all know this, is he's a wet blanket. He's a shill. He's a shill for Trump, and that's it. Myron at least has some impressiveness to stand on, but Kevin Hassett doesn't. In fact, The Economist bags on the guy as being the guy who wrongly called for the Dow Jones at the peak of the bubble in 1999 to 4x and wrote a book on how the Dow was going to 4x right before the dot-com crash. And that in May of 2020, COVID deaths were just going to evaporate. So The Economist and a lot of people don't like Hassett. I personally haven't liked Hassett either. I think he's a wet blanket. And so it sounds like Trump wanted to announce Hassett this week, put out a feeler that it was going to be Hassett, which would be great for reducing rates, but not great for the status of the Federal Reserve. And I think people sent a lot of backlash Trump's way. And so all of a sudden Trump's walking this back going, no, you know what, we're going to wait. We're going to wait to decide until January of 2025 or 2026, so basically the new year. Now, The Economist is arguing that Waller is a way better choice, and I actually totally agree with them. They think that Chris Waller is somebody who will rightly focus on inflation, whereas Hassett wouldn't. Hassett wouldn't care about the risks. He would only care about making Trump happy. Whereas Waller is a monetary policy expert. And even though they don't totally agree with Waller's desire to cut rates, he wants to cut rates, but he actually has credibility and had multiple correct calls, including being dovish in 2011, being hawkish in 2021, and now warning about jobs and the labor market. So they think he's on the right side of history. And I kind of agree. I think as long as we don't get somebody like Kevin Warsh, it's good. Because ultimately, cutting rates is the right decision, and rate cut bets are moving in the favor of rate cuts. We got now a 94.6% chance of getting a rate cut December 10th, 31% chance of having a rate cut on my birthday, January 28th. And I actually think the ADP numbers this morning decrease the risk that we're going to have a hawkish cut on December 10th. So that's continuing our bullish trades for near-term bullishness in the stock market. This is what we've been talking about in the Alpha Report. We've been talking about it on the channel as well. And so far, things like Hood are breaking out, Tesla's breaking out, the Qs are rising above our lines. All three of these we've been mentioning in the Alpha Reports over the past week as breakouts. You've still got consumer stocks recovering as well. Fun, Dave & Buster's, Target, all of them coming up off of their lows. And if you look back the week before Thanksgiving, on the 18th, which was like within a day or two of the bottom of the market, made a whole video called Buy. And people are like, oh, Kevin got flip-flopping. And if you watch the video, it's like, no, we should be bullish between now and December 9th, the day before the meeting. Now, not only can we reiterate that that was the correct call, but we can reiterate that we might be able to be bullish even past December 9th, and the 10th meeting because of this weak jobs data. But that's short-term bullishness because we still have to deal with the risk of an unemployment rollover. Now, Redfin does not think holidays are expensive enough. Gifts, travel, everything adds up. Yet, big phone carriers are still ripping us off. $100 a month for the same service they've been selling for years. Contracts, hidden fees, and nothing new. Ugh. That's why the sponsor of today's video is Helium Mobile. They are a new kind of carrier. And yes, they even have a plan that is completely free. It's called the Zero Plan. It's $0 per month. No contracts, no credit card even required. Just bring your phone and your number, boom. Perfect as a second SIM for light users or even for travel, maybe as a two-factor authentication phone number nobody knows about. And if you need more, Helium has an affordable Air and Infinity plan. These plans are way cheaper than what the big guys offer, and yet you still get nationwide 5G plus coverage, boosted by their community-powered network. And see, there's the twist. You also, on top of getting money savings every single month in this community-powered network, you also get rewarded for using your phone. Helium gives you cloud points that you can redeem for gift cards at major brands like Amazon, Apple, and more. Families can even get kids plans starting at just $5 per month, so everybody stays connected without breaking the bank. So bottom line, today's sponsor is sending us a very simple message. Why pay $100 plus per month when you can get phone service for free? Click on the link down below in the description to download the Helium mobile app on iOS or Android today and try the plan that's reshaping how people connect. Redfin does not think we are going to have an unemployment rollover or recession. So take a look at Redfin's take, which keep in mind, Redfin got bought by Rocket Mortgage. So if you want to invest in Redfin, you could buy Rocket Mortgage, which I actually don't think is a bad idea. I'm a little biased because I think that's a great play. But anyway, take a look at this. The Great Housing Reset will take shape in 2026. It won't be a price correction or a recession, but rather gradual increases in home sales and a normalization of prices as affordability gradually improves. In my opinion, this is actually bullish being a realtor or a lender. Because remember, realtors and lenders make money off of volume. You want volume when you're a realtor or a lender. A little too zoomed in over here, aren't I? Yeah, I'll fix that later. But anyway, you want volume. So if you're doing loans, cash out refinances or whatever, 2026 could be great, recession or not, because as rates slowly come down, you're going to have more people refinancing. And that's sort of the crux of this reset piece here. See, they argue that the weak labor market will lead the Fed to cut rates more in 2026 and bring monetary policy to a more neutral rate. Now, they're only thinking that mortgage rates are going to go to the low 6% range, which it's worth remembering that the Fed cutting does not equal lower mortgage rates. The problem with the Fed cutting is Fed rates have nothing to do with mortgage rates. The 10-year is more closely associated with mortgage rates than anything else. The problem with mortgage rates is mortgage rates are going to price in the risk that you make a policy mistake and you actually induce inflation again. Unfortunately, Kevin Hassett and the choice of Kevin Hassett has increased the risk of a shock. Remember, we're shock prone right now. You have to remember back in the banking crisis that we had in 2023, we were not shock prone. We were nowhere near shock prone. That was right here. We were totally inverted on the 2's10 yield curve. That's not shock prone. You're shock prone post liberation. So this is when we're most sensitive to any kind of like private credit disaster or AI shock or whatever. Now, Blue Owl doesn't think that there's a shock. You've got Blue Owl executives and staff buying $200 million worth of their shares after their, roll up of some of their funds failed after the Financial Times exposed them. And they're like, all right, fine, we'll go buy the dip on our stock. That is somewhat of a bullish signal, or they're just throwing good money after bad. We don't entirely know. But continuing with the Redfin comments here, they think that home prices will rise 1% in 2026. So it's slow. It's a slow up, which makes sense because rates haven't come down rapidly yet. That's actually bullish for being able to buy, though. And that's what I like, is I have this mindset of I want to accumulate as much real estate as I can. 2022, 3, 4, 5, 6, accumulate as much real estate as I can. And if we end up having a recession and rates go to zero, I think real estate can actually boom, because I don't think this would be a real estate recession. Or we just slowly get rates down and then real estate also booms just by the nature of rates coming down more over time. More so than even Redfin is calling here. I personally think, and if I were the Fed chair, this is what I would do. If I were like in a magical world, Fed chair and president of the United States, I would remove tariffs immediately. I would negotiate free trade in a different way using soft power and hard power where necessary, but I would negotiate free trade in a different way. I would not use tariffs. I think tariffs are a terrible idea. And I would instantly, if I were also Fed chair, I would instantly force rates down to 2%, maybe even 1.5%. That's how I think you stick the soft landing. That's my opinion. And I think by removing tariffs, you wouldn't actually be causing inflation in this case. So now, obviously, my opinion, it's not necessarily going to come true. But that's my bias, if you will. Now, what's interesting is as I'm recording this segment here, we talked about the Kevin Hassett and Waller situation, but look at what just dropped. Front page of the FT. Bond investors warned U.S. Treasury, so Bessent, over picking Hassett as Fed chair. That's probably why the 10-2 Treasury spiked. Treasury Department solicited feedback on Hassett and other candidates in one-on-one discussions. Discussions took place in November before Bessent held his final round of interviews. Treasury declined to comment, blah, blah, blah. But yeah, basically people think he's a shill. Nobody wants to be Liz Truss. Ooh, wow, good call. Good call. Like, you need somebody that you could believe in, and unfortunately, Hassett's probably not that guy. But that's okay. They could pick Waller. Waller would be a great choice. I would be so happy if they pick Waller. So this is great news that people are putting up a fuss. And people should be putting up a fuss over this stuff. It's kind of like the fuss people should be putting up at MicroStrategy. I hate to say it, but Michael Saylor just dropped $27 million on a new jet. Look at this. Net cash used in investing activities increased $15.4 billion. They spent $15.4 billion in the increase for the increase in purchases of Bitcoin and a $27 million deposit on a new corporate jet aircraft. And I think it's hilarious because, first of all, what are you buying a corporate jet for? Like, I get it. If you're investing in real estate, across half of the United States, you need to go meet people. You need to go do your damn job. You're going to have to go fly around and meet people. You got to do your job. But what you actually have with Bitcoin, what are you going to go check on your cold storage in different locations? It's insane. Michael Saylor doesn't need a jet, let alone an $80 million jet. I'm guessing it's probably a G600, somewhere between $80 to $100 million is my guess. Kind of crazy. What's also very interesting is, wow, look at this reference. In 2007, MicroStrategy 101, when not to buy a corporate jet aircraft. They bought a $46 million jet aircraft right before the crash. Holy smokes. Crazy. Somebody says Michael Saylor needs money to fly his mistresses around. Michael Saylor's gonna float off into the sunset, rich like crazy. It doesn't really matter. Even if Bitcoin and MicroStrategy go bankrupt, he's already sucked his money aside into mansions and real estate and probably other assets that he doesn't tell us about. But anyway, the Michael Saylor thing's totally separate from what we should talk about, which is continuing with this great reset piece here, which is home buying will become more affordable because home price growth will be slower than wage growth. So Redfin is actually making the argument of a soft landing. This is a soft landing argument. It is not consistent with what we are seeing right now in ADP reports. Now, that's not necessarily saying they're wrong. It's just saying it's not what we're seeing right now. In fact, what we're seeing right now is small businesses are getting whacked. Small businesses are cutting expenses, which is smart. I think it's already a little too late to cut expenses. You know, I massively cut expenses at HouseHack, and then took some of that money to invest in real estate and some of it to invest in AI. And what came out of it was this phenomenal AI product that, you know, I want to double down on and maybe even triple down on because, you know, I actually think we might run into an IPO boom cycle of euphoria thanks to AI. And there could be a rush for people to IPO in 2026. And I'm like, man, sign me up. Let's go. let's rocket ship this. No guarantees. This is not a solicitation to invest. Always read offering circulars. Investments come with risk. But look, Anthropic taps IPO lawyer as it races OpenAI to go public. So you've got Anthropic tapping a law firm and talking to investment banks to potentially go public at a $300 billion valuation, which is kind of a bullish sign. You know, it wasn't like Microsoft's lowering AI growth targets wasn't bullish this morning. You know, they came out with this piece right before the market opened. The market briefly tanked, and I'm like, this is not a big deal. And the reason we know it's not a big deal is because we read the bottom of the article, which probably nobody got to. But really, maybe my guess is one group or one sales group says that quotas for the Foundry product were reduced from 50% to 25% growth, which is still really good growth, right? Microsoft overall is denying that these quotas have been lowered. So my guess is the company as a whole is denying it, but you know, some teams lowered quotas. That's my guess on how to reconcile those stories. Who knows? But broadly, you know, so far this ISM report we got this morning still talk about trying to fill vacancies for jobs, not getting a lot of applications. Yes, employment weaker, but not falling off a cliff, which is good. This morning, we also, in addition to the S&P ISMs, we got the the ISM report. This morning, we also got the S&P PMIs, which was this, and actually indicated output growth in all 7 sectors still positive, though slower. Things slowing down. A little bit of a slowdown in employment as well, but majority of things were still in expansion. So we're not falling off a cliff, but pay growth is falling. Pay growth is seeing substantial declines, at least based on the ADP reports, and it's worst amongst the smallest of businesses, which makes sense. Okay, so, you know, trying to put all of this together, hopefully Redfin is right. But the bottom line of what they see here is they think we're going to see a lot of potentially people partnering on real estate, which I think is a terrible idea. I think the only way you should ever partner on real estate is if one person is in control. Like, you know, this is why we structured HouseHack the way we did, so we can't have fights with partners. No partners. You know, Kevin's the boss. We will do this. And wow, the ship works. I'm like the dictator of real estate. You know, it's like, we will be doing it this way. And it's fantastic. It works really, really well. But if you have, you know, you get into a partnership, I think this is a stupid idea. They literally talk about prenuptial style partnerships for Gen Z and millennial to try to afford homes together. This is dumb. But they also talk about a renovation boom coming. And if you remember, Warren Buffett just invested into home builders and renovation stocks. Specifically, he invested in Pool and, you know, his home builders. Look at Pool. If you go to Pool's been declining. So maybe, is there an opportunity there? I don't know, but maybe something to pay attention to again. So what you also find is Redfin argues that people are going to renovate their homes more as rates come down. They'll also pull out more HELOCs or cash out refinances to fund those remodels. I'm personally extremely bullish about this for our renovation AI, because if there's going to be an AI IPO boom and euphoric phase of the cycle, and people are going to renovate more, dude, I'm just thinking to myself, like, this is music to my ears for house hack and house hack investors. Obviously no guarantees, but like, I'm really excited about this. So now, how do you benefit off of this? Well, I think first, I think this is bullish mortgage companies. I think this is bullish renovations if we get a soft landing. And broadly, it's bullish the consumer if wages do actually start growing the way Redfin says this housing reset will occur, if it's accurate. And Waller will be a good Fed chair if we end up getting Waller. So we'll see. Obviously, the next 5 months are going to be critical, especially after that ADP information this morning. Bad jobs report, negative jobs, which does, basically guaranteed our December cut and probably gives us less hawkish of a cut in December, which is great. But something you have to think about for the next 5 months, like things that I think are smart to do right now. Number one, brush up your resume. Number two, pay down debt as much as possible. Number three, grind to build your cash reserve. No margin, cash reserve. Move extra cash to an investment account so you don't spend it. Like, I'm a big fan. I sent out a daily wealth, the free daily wealth. Sent out a daily wealth saying, hey, like, have you set up your auto investing? That was just an example of a daily wealth we had yesterday. And I give an example of how I'm setting up my auto investing to go from salary to investments, right? But then also add skills. I don't think you can ever go wrong becoming a realtor, becoming a lender, becoming a pilot, whatever, becoming a licensed electrician, or even learning how to do these sort of things. These are good. So that's a strategic way to protect yourself. Betting on a stimulus check is kind of cool, but it's a gamble and it's a bandage for what's really happening in the economy. So that's my broad outlook and strategy. Now, with that said, yeah, the employment numbers, I hope the worst ends soon. Like, hopefully October, November are just bad juju, and we can start getting back to growth in December and January. If we start inflecting, by the way, that's going to be your tell. If you start inflecting on jobs growth up and we start actually going positive again, bullish, man. Bull bear scale, bear bull scale, skyrockets, man. That's when you go bullish AI, bullish debt, whatever, because that's when our soft landing starts sticking. So pretty excited about that.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.